Cash offers are a really big benefit over financed offers, and there's a couple of different reasons. At the end of the day, the seller is going to receive roughly the same amount of money, whether it's cash or whether it's financed. Some of the pitfalls that come along with a real estate transaction primarily fall on the lender. And so you have a handful of items that the lender relies on to get to the closing table. So it could be a property condition report. There could be deferred maintenance on the building and the lender could opt not to give you the loan. There could be an issue with the appraisal. The appraisal could come in too low and the lender's not willing to issue the loan. Also, the buyer could have circumstantial changes. They could lose their job. Their credit could decrease because they went out and put something on a credit card or they opened a new credit account. There's credit minimums when it comes to qualifying for a loan. I think the FHA credit limit right now is a 620. Conventional loans is a 675. Don't quote me on that. Your local lender can tell you exactly what that is. But the idea is that if somebody is rolling around with a 675 credit score and they go out and they get one new credit card or they go over 20% of their available balance, they could dip down to a 670, which would disqualify them from a conventional loan. And then they'd have to go another direction with FHA. There's just all sorts of pitfalls. So when it comes to cash versus finance, it's a mental game. A seller is far more likely to accept a cash offer over a finance offer, even if they're identical, because the risk to the seller is reduced. And most well-versed real estate brokers are going to know that. And so if I, as a real estate broker, have two offers, one conventional, one financed, and I have a client, I'm going to share with them all of the pitfalls that come along with the financed offer versus all of the benefits of a cash offer. So it doesn't really impact the seller's bottom line, but it does impact the bottom line of their emotions going through a real estate transaction because they're stressful. There's all sorts of things that can go wrong. And so you're basically eliminating the need for an appraisal, which is a big part of it. And you're eliminating the need for a third party that's judging one of the parties to tell you whether or not they qualify for a loan. So if you have the opportunity to buy with cash in a competitive market, you should always do that. Even if you plan on down the road refinancing and borrowing money against the house, if you have the ability to buy cash and then refinance, you're essentially doing a mini version of the Burr method, which is buy, rehab, rent, refinance. The only difference is you're buying. Maybe you're not doing much of a rehab. You just move into it and then you wait about 12 months and hopefully it's appreciated in value and then you refinance. A lot of times the other thing is it's easier to qualify for a refinance loan than it is a new purchase loan. And so if you have a great grandmother or a great grandfather that has a couple $100,000 that they're willing to lend you for a short period of time in a competitive market, that's a very good way of getting into a house. That money can be secured by a note and mortgage, just like the big banks do, Chase and Wells Fargo, they use the same tools. You could do that with a family member and beat out your competition, wait 6 months, 7 months, 8 months, and then refinance and pay off your family member. So if you have access to cash in any form or fashion, whether it's yours or family members, or even a line of credit on another asset, always go with the cash over finance. Hey everyone, Michael here with Absolute Real Estate. Thank you for watching. Do me a favor, like and subscribe below. And if you want more information on real estate and real estate investing, check out the links below and I'll see you on the next video.